Hello viewers, in this video I'll be going over WTI crude oil, ETF ticker symbol USO. Today we are down 2.4% and we have about 4 hours left in trading. On the 1 hour chart, we do see the 1 hour RSI is near oversold territory, so I do expect us to reach that at some point during the day. On the 4 hour chart, we do see a divergence on the MACD, and I'm not sure if we may hit negative MACD sometime today or tomorrow, but we do find some stable support on the 200 moving average right there on the daily chart. We start to see positive note for the bulls. The MACD is nearing positive as well, and we are at support on the 9-day moving average right here. And as you can see, we start to see a wick forming or a candle shape, and at the moment we are hitting resistance as expected, the 200-day moving average. So once we are able to break out from this, we are in a tight triangle. Let me draw it for you. So we have upward momentum and then a flat resistance. So as we get a bit closer and closer, bouncing or sideways price action, we go and hit high volatility to maybe express to the upside or to the downside at the moment. So at the moment, I do see resistance hitting right there, and we are currently at support as well. So if we do lose support, the price level I do see is roughly around here, $11.45. So that is our immediate support if we do break out from the 9-day moving average. And for resistance, where we left off in gap and past resistance from early or July 12th, where we peaked off this month, or last month I should say, at a price of $12.57. So if we were to move on higher, that price movement is roughly 7%, and if we were to move down lower, that price movement is 2.5%. So let's head to the forecast model. So on here, I'll go day by day where WTI crude oil would go to in the next coming days. So 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So back then, so which one of these forecasts we should focus on? First, let's choose the trend that currently matches the current trend. We have the current trend right here, and the past trend in question right down here. I'll point out why these two charts are similar. So what we have here in the beginning, we have a downtrend right down here, and then we proceeded to make a reversal to touch the upper Bollinger Band right here, and we have a peak right here as well. So, and in between those peaks we have a dip right there and another dip right there as well, and then we proceeded to go revert to the mean, hitting the middle Bollinger Band right there. So we have those points there, and right down here we start to see the downtrend right in the beginning right here, and then we find the candles touching the upper Bollinger Band, and then we see two peaks right here as well. In between those peaks, we see a dip, and here, and once more another dip next right there, and then we start to see reversion to the mean to touch the middle Bollinger Band right there. So again, this trend dates back to June 29th, 2016 to September 23rd, 2016. We have 1, 2, 3, 4, 5, 6 points. We also have 1, 2, 3, 4, 5, 6 points. So again, the forecast we should focus on is June 29, 2016 to September 23rd, 2016. So back then, WTI was roughly 8% in 1 week. So it looks like we may hit that resistance point that we encountered back in early July. So we have a good chance of upward momentum. So that is all. If you enjoyed this content, feel free to like, comment, subscribe, and thank you for watching.